We have a very interesting Tesla stock update today. Some good news to get into, some bad news to get into in regards to the market, specifically the bond market, sending us another warning signal of maybe there's more fear to go in this market, aka maybe markets could be a little bit weaker than what we think. On top of that, we're going to get into Tesla's technicals, the option activity, and all of the news that you need to know in the markets and Tesla. Hit the like button if you own Tesla stock or if you are an investor in our markets, and subscribe to the channel if you want to stay up to date with everything going on every single day. Stay informed and hopefully help you make a wiser investment decision with the most up-to-date information. So the first thing I want to start with here in this video is the weird divergence you're seeing going on in equity markets that is signaling there's a little bit more fear out there than a lot of people would like to actually recognize. And I think that's why you have seen a sharp pullback in markets today from where we were at the beginning of trading. It comes down to PPI. So PPI came in headline month over month at 0.5%. You were expecting 0.3%. Core PPI came in at 0.3%, expecting 0.2%. Core PPI year over year came in at 2.7%. You were expecting 2.3%. These are much higher readings than what was expected. But what did bond yields do today? Bond yields on the 30-year Treasury are down about 7 basis points. On the 10-year Treasury, you're down about 4 basis points on the day. So what does this mean? This means investors are buying the bonds. Wait, we just got very inflationary data today. You would think that would mean at least interest rates would stay steady where they are, or maybe even go up a little bit. I mean, interest rates, bond yields. You would have actually expected to see bond yields slightly up on this news, not down 5 basis points on the 10-year Treasury and down 7 basis points on the 30-year. And you can see TLT is doing a little bit of a gap up today, up 1.23%. Investors buy bonds when there is fear. It looks like the economy has not changed. The economic situation looks the same as it has been. Besides, inflation looks higher on the wholesale, your PPI, than what we were expecting. It doesn't make a lot of logical sense to see bonds higher today. Market participants are actually fearful today. This looks obvious now, as stocks on the index level are now in the red. At one point today, the Nasdaq was up 0.5%. Now, to an untrained investor, you would sit here and say, hey, bond yields falling, that's positive for stocks. It's positive for stocks if you're getting lower inflation or lower than expected inflation data. If you're getting lower economic activity leading to the market's perception that rate cuts are coming sooner. That's not happening. Bond yields are falling because investors are buying the bonds because global investors are fearful. That is not good news. But yet stocks have reacted to this like it is good news. Which I would imagine the number one reason why investors are fearful out there is because this Israeli conflict could spread to a much larger regional war, and the fears of World War, I'm not even going to say it, are higher than they have been basically ever since really the Cold War back in the 1950s through the 90s. You've never had this much fear about a potential escalation of conflict between nations. Now, this is a headline I want to bring to your attention. It says, Israel preparing hospitals ahead of expected escalation of violence, health ministry says. Israel is readying its hospitals and healthcare system for, quote, possible escalations in the security situation, according to health officials. The Ministry of Health is facilitating the transfer of patients from the hospitals in the north of the country to hospitals in the center to allow preparedness of the hospitals in the north for any possible further escalations that may occur. This move comes ahead of an expected ground incursion by the Israel Defense Forces into Gaza and attacks coming from within Lebanon and Syria. So they're moving patients into the interior of Israel, freeing up hospitals on the north, in the south. It looks like they're preparing for a larger conflict. I think that's why the markets are buying bonds. It's not because good things are happening with inflation or lower economic growth than expected. It's because this conflict is going to escalate. And usually the leading indicators of a larger down move to come in our markets would be things like big money buying the bonds when there's no reason, justifiably speaking, that should be happening. And I think that's the reason this is so troubling. The markets will react to lower yields on really no good news once you finally figure out why. The bond market is much more intelligent than the stock market. The bond market is magnitudes larger than the stock market, 2 to 5 times larger. So people that buy bonds that move the bond market, I should say, are big funds, your $100+ billion funds, mainly governments, and even some citizens out there. But mainly like governments. They move the bond market. Big funds, big money. Just to point this out a little bit more in detail, look at TLT before the Rona. This is on a weekly chart, so each of these candles represents a week. Bonds started moving higher in August of 2019 and really started to move higher in January and February of 2020 before you ever seen the markets pull back. During this same time, stocks were ripping higher, hitting new highs. Okay? Stocks did not fall at all. But someone in the bond market knew something bad was coming. Stocks did their own thing. Bonds really knew what was coming. And that's why yields were falling. Tesla stock today at the time of recording this video is down 0.62%, but we're actually getting some pretty good news from Tesla today. New drone footage is showing us a massive lot filled with Highlands. Some of these over here could be different makes. It's hard to tell, but they all do look like Highlands from my perspective. Now, I did a little bit of math on this. So these columns look roughly similar. I know there's patchy spots here and there, but if you look at this column here on the right side, my screen might be blocking it just a little bit, but each of these columns is about 300 vehicles. Give or take a little bit more, a little bit less. And you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 of these right here. It looks like you have 3 of these over here. That makes 15, 16, 17, 18, 19, 20, 21. I mean, times 315 by 21. I mean, that's 6,000 vehicles. Discount this by 20% if you would like. And you're looking at likely a minimum of about 5,000 vehicles sitting in this lot ready for export. This is a solid sign that deliveries are going to ramp up. Now, last week's vehicle registration numbers in China only hit 1,000 vehicles. This was really, really low. Question is, are most of these vehicles going to export? Probably, but a lot of these are probably going to make their way to Chinese citizens as well. So hopefully those numbers don't look nearly as bad as they did for last week. This is at least an encouraging sign that things are going just fine. One, with the ramp of Giga Shanghai, but also with demand over in China. China did also announce new measures for stimulus yesterday. This had a positive effect on Tesla and basically any other stock company that does business in China as well. So when we get more details on this stimulus package that is coming, I expect that's also going to be a positive catalyst for Tesla stock. Morgan Stanley's Adam Jonas has released a new Tesla note. Quote, "We hosted a bull/bear lunch with investors yesterday in Midtown Manhattan. Sentiment around Tesla's earnings estimates for Q3 and Q4 skew cautious. Many are wondering if Tesla can grow earnings at all in 2024. Impact of Dojo/AI is difficult to quantify and easy to ignore. The Cybertruck. Very little enthusiasm on Tesla's next model. Teething issues seen as perpetrating Tesla's relatively stale model lineup. If Cybertruck is delayed and the ramp is slow, when Tesla then Tesla will be seen as continuing to resort to price cuts, which has been the recent trend. However, if Tesla announced a launch event / the start of production in Q3 results, this could be seen as a positive for the stock. Morgan Stanley also put out their tactical thoughts ahead of Tesla's Q3 earnings release, due post-close Wednesday, October 18th. Now, they say Tesla already disclosed 435,000 units, which was approximately a 5% miss versus consensus. Revenue, they forecast $44,500 per unit, down from $45,000 per unit in Q2, driving the estimate of $19.4 billion for auto revenue and $23.3 billion group revenue for Q3. Gross margins, excluding ZEV credits, we forecast underlying auto gross margins falling to 17.5% in Q3 versus 18.1% in Q2 and 19% in Q1. ZEV credits historically are unpredictable, but we see scope for ZEV credit revenue to play a larger role over the next year as some high volume competition or competing EV plans may be dialed back. Operating profit, our gross Q3 forecast for GAAP operating margin is 9.3% versus 9.6% in Q2 and 11.4% in Q1. So they're basically saying earnings margins are probably going to fall even more. Their US GAAP EPS, General Accepted Accounting Practices is what GAAP stands for. EPS estimate is 56 cents versus 78 cents in Q2 and 72 cents in Q1. Consensus Q3 US GAAP EPS estimate stands at 65 cents. So Morgan Stanley is even lower than the estimate here that Wall Street has. Cash flow, we forecast just under $1 billion of free cash flow in the quarter, roughly flat on a sequential basis versus Q2. We agree with the consensus that the performance of Tesla stock following the print will likely be driven by comments on the forward outlook and how that may move consensus up, down, or neutral for 2024. So in English here, Morgan Stanley is saying a lot of these numbers are probably already baked into Tesla stock, considering even my opinion. Tesla just cut the price of the Model 3 and the Model Y. That's going to have a downside pressure effect, likely to margins. Tesla stock was green that day. Now, I get it. The markets were also really green that day, so that definitely did help. But you haven't seen a follow-through downside move in Tesla ever since then. It's actually been an upside move. So I think the fundamental picture for Tesla, while it is the most important thing, it's probably not the most important thing this quarter. What's probably going to move Tesla stock is whether or not we get the Cybertruck delivery event, whether or not estimates are risen for full year delivery numbers or for 2024 delivery numbers. That's what is going to move the stock, at least what Morgan Stanley says, and I agree with that. Plus or minus a little move in margins, probably not going to get people super excited. Probably not going to cause a lot of fear. It's probably not going to do much. That's kind of what we seen last earnings, as I talked about in the last video. Tesla, following their earnings results, moved up a little bit. It moved down a little bit. It went back up. It traded like literally sideways. There was no direction with Tesla's earnings until the earnings call, until Elon confirmed there would likely be more price cuts in the future. That's what moved the stock. It's mostly about the forward-looking statements, in which, if you guys want my personal opinion, those forward-looking statements are probably going to be a date for the initial deliveries of the Cybertruck, as well as the date for the Cybertruck delivery event. I believe if you don't get that before earnings, you get that on earnings. So that's probably the thing the stock is going to react to, and it's something that even as you see from Morgan Stanley says a lot of their high, important clients, high net worth clients that they had this sit down with in Manhattan, think there's not a lot of optimism around the Cybertruck. Well, that's obviously false. There's 2 million plus pre-orders for the Cybertruck, but it hasn't been announced yet. We don't have a start date for deliveries. It's hard for analysts to assign value to something that is non-existent. The reality that the Cybertruck is coming, and it's coming here soon, will probably be realized on the earnings call, and I think that is enough to send Tesla the next leg higher. But again, I would really like to highlight, if all hell breaks loose and we get into a conflict in Israel or something else crazy happens out there, it's not going to matter if Tesla has good earnings and announces the Cybertruck. If the markets do fall 10 to 20%, in which I believe is possible if the situation does escalate, that is going to take precedence. But as long as nothing changes, I see Tesla stock going higher from here. And I think really the only thing that's going to push Tesla stock down at this point is really bad out of the blue economic data, which we just haven't seen that yet, so I am not willing to make that bet, or an escalation in Israel. That's really it. And I mean, let's hope that doesn't happen. Odds are it probably doesn't happen, and stocks and Tesla will move higher. Tesla Hong Kong posted on their X account that the first V4 supercharger station is now open in Asia. Tesla has sold the wireless charging technology company Wifron less than 3 months after acquiring it. However, Tesla is reportedly still retaining an important piece of the company, and their engineers are not included in the deal and will move to Tesla. I'm fascinated to see if we get clarity on this. I imagine the piece of the company they actually saved was the actual technology itself. Wifron, if you guys don't know, it's that company that Tesla obviously bought and has now sold a majority of it, that you kind of drive over the charging. It's kind of like a wireless charger for your phone, but wirelessly charge your car battery. So I would imagine Tesla probably saved the part of the company that was the actual wireless charging capabilities, because that's probably the only reason they bought this company to begin with. Starting today, Tesla owners in Israel can charge their vehicles for free at the company's superchargers. Today, Tesla has 22 supercharger stations throughout Israel. Most electric cars produced in Europe, but also some made in Asia, will qualify for subsidies in France. The finance ministry official Aurélien Shinane told a news conference on Wednesday. Idra, an Italian gigacasting machine maker and Tesla supplier, has added Ford, Hyundai, and a European company to its customer base. A Gigapress 6100, which produces a clamping force of over 6,000 tons with the Ford brand printed on it, had been assembled and has been tested in Idra's plant in near Brescia, northern Italy, during an industry event organized by the company on Tuesday and on Wednesday. Idra was also about to sign a supply contract for two 9,000-ton presses with a premium automaker in Europe, its first with a European group. And here is a picture of the Gigapress. Car Buyer UK has named Tesla's Model Y the best company car for 2024. Quote, lower prices and therefore less tax. Tesla has taken the car market by storm with incredible efficiency, fantastic tech, and access to all-conquering supercharger network. There is no better company car right now than the Tesla Model Y. Tesla announces on their X account that they have just built their 20 millionth 4680 cell at Giga Texas. This is a rough comparable to the battery cell that you see in older Teslas on the left and what you're seeing in newer Teslas, this 4680 cell over here. Taller and definitely wider. Roland Percher is reporting that 30,566 exports of the Model 3 and the Model Y from Giga Shanghai happened in China. In September, due to the production switch to Highland, only 2,079 Tesla Model 3s were sold in China. P.S. Model S and X imports will come in just a few days. And China has now reported 43,507 Tesla sales for the month of September, the best Q3 ever, and 12% quarter over quarter. Year to date, 37% over the same period last year, and year to date is 99% of last year's total. So you're basically at a new all-time high for China Tesla deliveries. Croatia reported 42 Tesla sales and 1.1% market share for September, the second best month ever, with 32% higher numbers versus last month. Year to date, 593% over the same period last year, and year to date is 560% of last year's total. So it's a very impressive growth, although the number is small. Croatia also quite a small country. Tesla South Korea registered 5,315 vehicles in Q3 thanks to a large number of Model Y rear-wheel drive registrations. The total cumulative registration number is 56,592. As imports continue to be made in China, it is expected that we will be able to record as many registrations as we did in Q3. Also, the new Model 3 Highland has landed in South Korea, probably for certification testing. Tesla's option activity today is exceptionally bullish, coming in at 82% positive. You have seen 558 orders totaling $311.59 million. Considering we usually see a big jump in the last 30 minutes or so of any given trading day to the dollar amount of options bought or sold, I'm sure these numbers will look a lot different in the video at 9 p.m. tonight, in which we will cover, but I want to point out again, the standout positive order value is pretty dang impressive. And just for a reminder, Tesla continues to be by far the most heavily shorted stock in our markets, sitting with $22.56 billion that are sold short. This is up 2% in the past 7 days. The estimated short interest of free float is up almost 1% as well in the last 7 days. Tesla's inventory numbers sure look like they spike for the Model S and the Model X. We reported this in the video yesterday, and for today's update, it doesn't look like these numbers have moved around all too much, but you are seeing quite a spike in the Model 3 and the Model Y now. So this could be seen as good news and bad news. It's bad news if you continue to see a spike higher. You really want to see the numbers staying in about the range they are now, which I would say right now, this is good news. Google Trends data continues to look strong for the Model Y in particular. The Model 3 is still well above its trend, but it is really starting to base out where the Model Y is continuing to go higher, probably due to the recent price cuts that Tesla has enacted. Those individuals that maybe were trying to get a Model 3 before, now maybe they're considering the Model Y. And most of this search trend interest is in the US, that sits at 23, Canada sits at 21, Australia is 22, China is 25, and Norway is at 100, and Iceland is at 57. Most of the search trend activity is really focused in these countries. Europe sees some respectable numbers. Germany sees 20 for their search trend interest, France at 17, and the UK at 11, Spain sitting right here at about 6. So it does vary country to country quite a lot, but the countries that are important to Tesla still seeing healthy search trend activity. It does look like Tesla is still running about 200 ads according to Google's Ads Transparency Center. Tesla stock today is down about 0.5%. You're again finding resistance right here at about $265 per share. Again today, you hit a high of about $268 per share, and you have since fallen. A lot of this has to do with the fall in the broader markets as well. I think people are getting a lot of bullish positioning, as you could also see in the option activity we reported earlier in this video. People are looking pretty bullish on Tesla. If you break out above 265, that's where things get juicy. That's where you can see a bigger move to the upside. That would be breaking out above the longer term downtrending line, connecting the peaks that you have seen back in 2021 as well as 2022. And now that sits at about 265, a break above there, then you can send Tesla stock well into the 300s. Now on any downside move, your 50 and 100-day moving averages averages are sitting right here at about $250 per share. That's going to be a solid level of support if you do get downside. If you get downside under that, you want to watch roughly about 240. That is where the prior level of support really sits. And then this is also now connecting your uptrending line of support that you have seen since you made the low back here in January of 2023. So if you were to come down in a sharp manner, 240 would be a big level. If you break under that, well, probably something broke in the broader markets and we have a problem. Maybe Tesla's earnings, that's always a possibility as well. Then you fall back to about 210. That is Tesla's 200-day moving average. The MACD looks very good, continuing to get more bullish here today, and the RSI is really flattening out at 55.90. It's more so on the bullish side, but I still consider this $5, $10, 5 to 10 point range on the RSI to be pretty neutral. Anything above 60, you're getting pretty bullish. Anything under 40, you're getting pretty dang negative. So that is going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you guys want to take it a step further and come trade with us live in real time, I send out all of the trades that I make when I make them. Link down below in the description of this video. My name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.